But I'm really glad I got a chance to do this panel because for me, this is sort of the penultimate topic. This is how we really see the convergence of Web 2 and Web 3 worlds, how we see Web 3 actually bringing technology into the traditional capital markets and beyond. And I'm really pleased to have this distinctive panel. And can you guys introduce yourself, starting with you, Henry, please?
Thank you, Vince. Good afternoon. I'm Henry, founder and CEO of DGFT. DGFT is a marketplace. You can call it exchange. But we are the exchange for RWA tokens, real asset tokens, not cryptocurrencies. And related to today's topic, we are an exchange built on DeFi infrastructure. You can call it the online on-chain exchange or called the DEX. And we are licensed. We are first licensed in Singapore. So it's the first regulated on-chain exchange for RWA tokens.
Thank you. Ashok?
Hi, my name is Ashok. I lead the blockchain and digital assets practice for MasterCard in the APAC region.
Yep. Hi, I'm Pei Ling. I'm co-president of Metacom, which is part of the MVGX group. As a group, we focus on green tech, green financing, as well as digital assets. So Metacom is part of the fintech side of the group. And together with MVGX, which is the exchange part, Metacom does the payments, OTC, the flow part. The vision that we have is to bridge exactly what today's topic is about, TradFi and digital assets. So very pleased to be here. And on top of that, I have about 13 years of legislative experience as well. Yeah.
Hi everyone, Jonathan Gill from Hashkey Group. So I'm Senior Tokenization Director, and Hashkey is a end-to-end virtual assets company licensed in Singapore, Hong Kong, Japan, and Bermuda.
Outstanding. And it's great to see you guys all here. And I know you all, and I couldn't be happier to be working with you. So I guess we're going to start out with, I'm going to read right off the script. How is DeFi driving new ways of thinking in traditional finance? And which DeFi innovations are most compelling for adoption into traditional finance and why? And I want to start, I guess, with Jonathan on this, but I'm itching to ask Henry about something too. So Jonathan, would you kick it off?
All right. Well, I'm going to, since Vince is probably too shy to bring this up himself, I'll bring this up for him since it's a Chainlink conference. I'm quite impressed by how Chainlink has actually integrated its proof of reserve solution into 21 shares Bitcoin ETF. So the way that works is if you are aspiring to be an investor, what you can do is look at the Bitcoin reserves and look at the history, and you can look at the collateralization yourself. So you can actually verify in real time whether or not the amount of Bitcoin that is supposedly held by the fund is the correct amount, whether that's gone up or down. And so it's no longer a case of being a 13F quarterly filing, on a quarterly basis. You can then check yourself. So it's really changed the idea of continuous disclosure.
Excellent. Henry, I'm going to jump right at it. I am very curious to hear about how you use automated market makers in your structure.
Yeah. First of all, decentralization is a pretty confusing word. Difficult to understand. What does it mean, decentralization? They have different definitions. It's not for academic debate, but I would say one way to look at the decentralization, I would interpret it as de-intermediation. It's try to reduce as many as possible unnecessary intermediaries. So direct point-to-point is one of the example. Then we say if we apply so-called this kind of a decentralization feature or technology into the mainstream financial world, there's a possibility we can reduce many unnecessary intermediates currently have. More intermediary you have, which means more steps, more time, more costs. So if you can reduce, definitely it's better. Then, of course, we need to embed into under the legal framework, context of regulation, etc. But now this unprecedented technology just enabled us to reduce substantially many unnecessary intermediaries. So I would call it efficiency, but I would use a word like open or openness. So with this kind of decentralized technologies, the financial industry can be much more open and composability. And of course, given to this Chainlink context, right, is to interlink different components is called interoperability. Then the future world can be better.
Excellent. Thank you very much. And Ashok, I mean, you guys have kind of been at the vanguard of some of the more interesting use cases.
Yep.
Can you talk a little bit about that and how you're incorporating DeFi into your solutions?
Surely. I mean, most of you probably don't think of MasterCard to be in this space, right? You know, everybody thinks of you as a card company. We're very far from being a card company. We've kind of moved on to be more of a payments technology company. Initially, our focus area was really to help Web3 players on-ramp and off-ramp funds from their existing wallets, right? And then we kind of realized that, you know, we can actually use the underlying technology to do a lot more. So, you know, for us, it's all about kind of providing liquidity and moving money. So we find the kind of the liquidity pools out there, the connecting points out there, where we can actually have access to greater liquidity depending on when you need it. And one of the big pain points in payments has always been 24/7 availability of payments. Now, with this new technology, we're able to provide access 24/7 anywhere in the world, any corridors, right? So those are some of the key areas that we're trying to focus on to solve for. And the way we kind of look at this is, you know, we kind of break it down into like our consumer payments and our kind of our B2B payment size. Now, on the B2B payment side, a lot of the issues from the earlier panel and the panel before is around how do you move money in large chunks cross-border? Do you use a stable coin? Do you use a tokenized deposits? Do you use a CBDC? Now, those are potential solutions, but at the end of the day, MasterCard as a network has to carry any of those different types of digital assets on our network. And we're kind of preparing our network to do exactly that. So as a consumer, either retail or a business, you shouldn't have to worry about when you want to make a payment, what is the underlying currency or the underlying currency type. You know, no matter what it is, if the central bank finally decides to release a CBDC or a bank decides to do tokenized deposits, or there's 100 different stablecoins out there in different currencies, we as a network will be able to carry it.
That's great. And I guess, you know, Pei-Ling, you guys have some really interesting product as well. In fact, I was reading a little bit about, what is it, Quark, the fund that you guys have?
Yeah.
Yeah, can you talk a little bit about that? And it's that to me is pretty much cutting edge stuff. So can you open up a little bit about that?
Well, I have to caveat that I've joined Metacom fairly recently.
Okay.
So this is one of the products that we've recently issued a media release about. So I probably won't touch so much on that.
Okay.
Yeah, but that would be between the MVGX side, offering the wealth products that we have worked with them. Yeah.
Okay, well then let's get into some of the other applications. Anything that you'd like to kind of contribute in terms of the movement of DeFi product into your environment?
Yep. So I think for us, there are two parts to this. For the we are a MAS licensed entity in Singapore. So for the exchange side, we are able to list tokenized investment securities. So that's one, and we have two real-world assets products that we have, collective investment schemes.
In fact, I heard you guys have 7 different licenses. Is that right? You have a custody license, you have exchange licenses, you have.
Yes, we are able to do derivative securities.
Right.
We have custody, so that's under the CMS license.
Of course, yeah.
And of course, RMO is for the exchange, the ability to do that. We've also tried to do tokenized carbon credit as well. So that was the original intent.
Right.
So for the, so as I was mentioning, there were two main products that we have tested with in terms of real-world asset tokenization. So one would be underlying traditional financial products, but we tokenize it, so there's a digital twin. So basically someone, an investor, so we work with a fund manager, for example, that's one possibility, and then we create a twin token in our system, and so then we get it listed, and you know, the investor can then use, if the person has a digital asset, to invest into the CIS. So that's one way. And then the other CIS, the other product that we have would be underlying crypto native. So we do arbitrage crypto arbitrage. And so that allows someone who may be in the TradFi space or in the traditional world space using fiat to invest into this product. So that's one example. But more than that, actually what we are also building is a platform where we allow our customers to be able to come on board, to be able to on-off ramp, to make payments or collections with third parties, but also to be able to buy these securities, whether it's fiat to stable, stable to fiat, or stable to stable as well. And eventually what we also want to move into is, I think, pretty much aligned with what the previous panel was talking about, whereby I think we want to change the way we think about FX as well. So it's no longer about fiat to fiat of different currencies, but more interoperably between fiat stable, 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 and eventually digital asset to digital asset. So I think this is the basically what we are looking at. And in a nutshell, is that we want to be able to provide payment as well as wealth infrastructure to our clients, mainly institutional clients. Yeah.
Interesting. All right. Jonathan, I mean, you straddle both worlds and you speak to a lot of traditional market players. What DeFi or new wave or digital projects are they really most interested in? Is there any particular category or asset class that they're more drawn to?
Yeah, we see quite a lot of interest in tokenized bonds, because I guess if you think about a bond, if it's fixed yield, certain fixed duration, that really lends itself to smart contracts and programmability. You don't need humans deciding how much you're going to pay as a dividend, when you're going to pay it, and all that sort of thing. If you know exactly when that's going to be done, that can all be done ahead of time.
Interesting. And Henry, you've done a lot of interesting tokenization projects. Maybe same question for you. What sort of asset classes are most interesting now, and maybe what do you see in the future?
Yeah. Technically, any asset of value can be tokenized, because tokenization is just a digital representative of ownership, not that fancy. I would say in the history, there are 3 stages, right? Stage 1, mostly the ownership is represented in the form of paper. Money in paper, stock is a piece of paper, bond is a piece of paper. Very difficult to exchange. Then coming to the current stage, phase 2, most of the ownership is represented in an electronic record, provided by some centralized entity. We give money to the bank, then we can view our account statement online. We buy stock, we don't see the stock, but we go to an online website to see how many stocks Tesla I'm owning. So that's the stage 3. Stage 2. Stage 3 with the technology of so-called blockchain or Web3, next generation of technology. Token is the evidence of the ownership. So that's token. Token is just the ownership of the underlying assets. Then coming to the tokenization, although there are many things can be tokenized, real estate, alternatives, gold, fixed income, that will be the future. There will be more and more. For the moment, the mainstream, as Jonathan mentioned, is like fixed income, treasury bills, bonds, or money market funds. That's the majority in terms of the volume of the current tokenized assets. Why? Because these assets are simple, easy to understand. You don't need to explain what is a bond, what is government bond, what is T-bill, what is money market fund. Then the people can focus on if those assets represented in a token way, how can we get it, which means subscribe and redeem. And more important, how do we use it? Because tokenization, something tokenization doesn't change is tokenization doesn't change the underlying risk return profile of any underlying assets. The bond is just a bond. Money market fund is just money market fund, no matter in which forms. But in the token way, then how to use this token, the way you get it, the way you trade it, the way you so-called pledge it, for example, that will be totally different. And so this moment is more fixed income kind of thing because it's simple.
Well, it's interesting because that's also a nice segue into the collateralization of those assets. People are more used to dealing with collateral that is in fixed income.
Exactly.
Ashok, I kind of want you to start us out a little bit with the technical discussion. I mean, the technical barriers to bringing decentralized finance or DeFi into the traditional finance world? You've certainly had some challenges getting people to understand blockchain, I know.
Yeah, I mean, I know you kind of think I'm not a technology person really, but I'm more of a kind of in between, right? But I want to kind of carry on what Henry was saying as well.
Please, yeah.
In addition to some of those regular assets that we're seeing, we're also seeing a little bit more on some really cool stuff, right? People are tokenizing real estate invoices. I was just having a conversation earlier this week about there's inventory trapped, right? Where there's trapped liquidity, and people want to see if they can actually, while they're waiting for that inventory to make it into a final product, can they get some of the trapped liquidity out, tokenize it, and sell it, so that way they can move some of that liquidity into other things, right? So
Sort of like the old receivables business.
in a way,
banks,
yes.
right?
Right?
Yeah.
I mean, it's gotten a lot more interesting now. Where when we first started out, I think it's like your last panel. Old school was like you tokenized your art and some monkeys and some rabbits and stuff, and then now you've kind of moved on to say, okay, these are more real world assets that have value. They can put a dollar value on. And then based on that, you can do some interesting stuff with it. Unlock your trapped liquidity. You can do some lending. People can borrow money from the pools. So a lot more creative ways to use these things rather than what we did in the past, right? But also to go back to your question about challenges, right? Being part of, I look down at my people on the stage, and majority of us are. Most of you probably came from a banking world, but have kind of moved on to Web3. I'm still kind of in a traditional business. Adoption is always really tough, right? And it isn't about adoption because of the technology. It's, some of it is the technology, but a lot of it is also nobody wants to be the first person to adopt these things, right? They want to be the second or the third or even the fifth, because they feel that sometimes being the first doesn't really have that advantage anymore. They want to make sure it works, there's people on it. And Web3 and blockchain is one of those things where you do need scale. You do need 30 different people to kind of send money to and receive money from, so to say. So as a result, being the first person there doesn't really have the advantages. So adoption is a key thing. But as Jonathan, Henry, Pei-Ling also bring out some interesting products into the market, that makes adoption a lot easier as well.
Right. So product then breeds adoption.
Product and also just basic understanding is also kind of moved to the next level.
Yeah. So if there's demand, build it and they will come.
Yeah.
I would like to add, I think adoption is a very key thing, and I think the adoption now would be also driven by traditional financial institutions coming into the picture as well. So I think for a long time we think that the traditional financial FIs are averse to this, but I think this is definitely changing. Bain, for example, has reports saying that most of these FIs are seeing that blockchain or Web3 in general is changing the way the financial system is going to work, and a lot of some companies are also seeing how it's benefiting them. In our experiences, interacting with some of these large major FIs, is that they are looking at this actively, but maybe along different points of the journey. Some are probably thinking about it, some having very cautious conversations around this, some are cautiously also experimenting with the technology and products, and others probably are already restructuring internally to embrace Web3 altogether. And these include banks. These also include some of the more conservative payment service providers as well. And so with them coming in to play a part in this, offering whether services or products, it also means that they are bringing along more retail customers to participate because they're offering them. So I think there is that, they will generate some demand. And with that, as adoption grows, actually I think regulators will also come in because now they have an incentive or the motivation to look at this, because regulators by nature will want to come in and protect consumers or retail participants. But obviously, regulators can also play an enabling role, because when they put in place clear frameworks to say what can or cannot be done, it's not just about punishing the bad or saying what cannot be done, but actually putting it out there to say there are certain standards that need to be abided by, and therefore increasing the trust. So I think there's a virtuous cycle here. So together, I think as we look ahead, adoption will increase, and hopefully, then the industry will also flourish as well.
That's great. That's a good answer. I want to go a little off the script here and ask Jonathan a question about competition in this space. I am a big believer that competition breeds innovation, and I'm looking at this bifurcation in between the two worlds of I would have to say crypto still, or that type of digital asset, and then what the banks are seeing, in terms of how they can leverage this technology. And I can see them looking over the parapet and saying, we really want to do what these guys do. The retail consumers seem to be very well served by one side of that architecture, and then perhaps the wholesale customers or the more traditional customers, the regulated customers, less well served. How do you think we cross that bridge?
Well, good question. I think that there's a few issues for banks. I mean, firstly, how deep do banks want to get into this space? Do they only want to be part of the value chain? Do they just want to be a custodian? Do they actually want to be an end-to-end thing? Do they actually want to be, distributing the tokens, minting the tokens, custodying the tokens, putting them on an exchange? Are they actually going to commit to that level of infrastructure? Second thing is how, obviously banks bring the scale and the customer base and the trust, but can you actually convert those TradFi users into DeFi, wallet holders and so on, right? That's not necessarily that easier transition. And then I think the third thing is, are you actually going to integrate all of these systems into your existing DeFi things to the extent that it could potentially cannibalize your existing business? Like, you may not actually want to do that.
Oh, that's interesting. I mean, Ashok, you must have some thoughts on this because, the traditional card space is now competing with all these P2P transactions and other forms of digital money. What do you think about that?
Oh, it's great for us, right? I mean, you made a valid point about competition. I mean, I think, us and the other card schemes are, building solutions which to really help the flows, right? And we feel that the volume of the flows hasn't really decreased, but it's actually gone up, right? Because we are able to do a lot more with stable coins and digital currencies that we couldn't do with traditional cash, right? And to counter what Jonathan was saying, I think the banks even initially the first thing you could think about what a bank would do was provide custody solutions, right? But in Hong Kong, Singapore, Japan, some of these AP markets, we're seeing that the banks are heavily involved in the DeFi space, either setting up their own wallet infrastructure, offering services to their customers, offering products to their customers, which are from this new Web3 space as well. So they're quite heavily involved. And I think going back to the technology portion of it, the cost of implementing some of this isn't as high as it used to be if you had to implement, like, say, an ERP system 5 or 10 years ago. Because a lot of it is very, very kind of API-based, very component-based. And what Chainlink has also done is that you guys have set up the plumbing for a lot of these guys. So no plug, just a point, right?
I don't mind a shill.
No, it's true, right? So basically, I mean, there's companies like yours which have kind of created the plumbing, which just makes it easier to kind of onboard and do and plug into a lot of the services without having to do a lot of changes on your existing infrastructure, right? So you can have your existing infrastructure continue to run and do what it needed to do, and then you can plug into some of these newer technologies and have access to a completely new revenue stream or things that you could do that you couldn't do in the past. Yeah,
Sergey often uses the analogy of what it used to take to set up a database was an army of engineers and about 3 months.
Exactly.
20 years ago. Now you can do it, a teenager can do it in 5 minutes, using the tools and appliances that are online. We're seeing a similar evolution in blockchain, where it used to be a monumental task to get something up and running, and now it's actually accessible through appliances and networks and so on much more easily. Henry, I want to close things out with you. And your model, I think, and congratulations, by the way, on some of your recent announcements, but your model, to me, strikes me as very, very interesting because you're a DeFi platform that is sort of operating in a regulated exchange space. And that's unusual. And I know that you had looked at automated market makers at one point as being part of that, sort of a real DeFi native mechanism. Can you talk about that a little bit?
Yeah, I'll just be quick considering the time. We have some views. First of all, we think decentralization doesn't mean deregulation. There's two different concepts. Decentralization, P2P, automatic market making is more technical terms. Some things you need to be regulated if you're dealing with regulated products. It will be regulation to a certain extent. So decentralization doesn't mean deregulation. Another part is centralization technology versus decentralized technology. They are complement to each other. They are not mutually exclusive. So as an exchange, it's just like a car. You have a car, you need an engine system, you have a steering system, you have a tires, kind of thing. As an exchange, we have a couple key components, like we have a pricing and a matching, clearing settlement, KYC, AML, market surveillance. That's the key components as an exchange. So certain part, we heavily using decentralized technology, means as you mentioned, the matching mechanism. Now we're selling stocks is a bid offer, right? We call the order book, bid offer. But bid offer is not the only price matching mechanism. So automatic market making is the one. That one does not exist before blockchain. With blockchain, with DeFi, we have AMM, called automatic market making. This is a very Web3. On the other side, for example, KYC, so far is a very centralized approach. Your ID, blah, blah. Yep. But as an exchange, we put all these things together, then we can say we made on a car, can run on the street. So sometimes when we are on-chain exchange, very DeFi, but it's not purely 3.0. It is something between 2.0 and 3.0. It's a 2.5 or 2.3 or 2.8. It's a combination.
That's great. That's great. And it's a nice way to sort of round things out. Anybody else have a closing remark they'd like to throw out in terms of this general theme of DeFi innovation stepping into traditional markets?
I think I already said much.
Yeah, I'm bullish about this. This is just moving to another level. Especially the big things happen is from the very beginning take a longer time for people to get used to it. But once you get used to it, you quickly forget the previous. Just like the things for everyone in this room, right? How do you listen to music? Streaming, right? Mostly streaming, Spotify, etc. When did you buy your last CD? You probably forget, but actually not a long time ago. But before we have a streaming, do you complain we cannot listen to music? We never complain we cannot listen to music. Before streaming, we have a CD. Before CD, we have a cassette. Before cassette, we have a radio. Without the radio, we go to the theater, see the real people singing, dancing on the stage. So we never complain we don't get access to the music in 1,000 years. But now when the new things coming up, people largely moving to the new way to get access to the music. So apply to the financial system, I will say the same story will repeat.
That's a great way to round out the discussion with that analogy. Thanks very much.
Thank you.
How about a round of applause for a great panel?